Ben, thank you very much for being here today. It's a pleasure. You visiting Brazil. You said to me that you have been here 6 months before. Now again, you're not a first timer. Brookfield, you guys have been here around for quite some time. Probably the investor that has been here for longer, international investor. And I know that you guys have initiated a build to rent platform in Brazil.
Yeah.
You're very strong in the States, in Europe, in many markets with that. What's the potential for the platform in Brazil?
Yeah. So it's something that we're really excited about. Maybe I'll step back and provide a little bit of context for our business in other places to give a little context for scale and what I think the opportunity set here is in Brazil. But I'd say as a general comment, housing and specifically rental housing generally is undersupplied globally. It's really institutionalized in the US, and you talk about North American investors and multifamily, one of the largest sectors, one of the most investable sectors, great performance over time. And it's easy to see now where you have a really healthy supply and demand balance between household formation, more renters growing, really that renter population growing globally, and an undersupply of institutional quality housing. So when you think about that as a backdrop, we think globally, how do we continue to expand our housing business and specifically take some of the lessons learned and some of the expertise we have across places like North America and other places around the globe into new markets where institutional rental housing doesn't exist. And so I think that's the opportunity set in Brazil, and that's what the team is been diligent working on. And so when you think about what we have here, we have about 1,300 units under operation with a pipeline to circa 6,000 to 8,000 more units in a supply pipeline. So when you think about what this could be and what the scaled opportunity could be, in a couple years' time, we could have upwards of 5,000 to 10,000 units in operation in a place where, when you study the demographics and the renter base and that underserved population of renters, delivering that sort of housing feels like a really exciting opportunity. So I think what we've started is a fantastic start to a platform, and it gives us a real ability to scale.
And one thing I can't help noticing is that you are working on a product that is really interesting for the Brazilian culture. Not just a apartment, but you try to offer different facilities in the building. And that's probably the reason why you are doing well in this field. Now, when you think about the same strategy for other countries in Latin America, do you see room for that?
When we think about investing, there's a couple things that we want to make sure that we can get comfortable with. One is a place where we have real scale and we're really local. Brazil, as you said, as we opened, we've been here for a very long time. We have a really large business here and a really deep operating capability. So that checks the box. And then second is, can we do things at scale? Can we deploy capital efficiently at scale? Can we build businesses that are large where we find operating efficiencies across our operating businesses, and then gives us multiple opportunities for monetizations, recapitalizations, further capital investment. And so Brazil checks the box on both of those in terms of scale and our local operating expertise. When you think broader than Brazil, I think potentially, but I think there's still a ton of room for us to grow that business here. And I think we'll be focused on doing that in our backyard here before we, I'd rather scale that business here before we go a little further afield.
A few years ago, when I spoke to Roberto, who heads your real estate business in Brazil, he was mentioning logistics to me. He was very bold. That was a few years ago, and you guys went big on logistics. Is this right if I say that the build to rent is the next big thing for you here? Out of all the asset classes, all the strategies, is this the main strategy for Brookfield?
Yeah, look, I think by nature our business is opportunistic. So I think part of it will be the opportunity set that's in front of us over the next couple of years. Because I think logistics will still be an opportunity that could be just as big, if not bigger, depending on the recovery or lack of recovery of offices, I still think that's a place where we've been very successful and we continue to see opportunities that may be actually the fundamental backdrop may be a little more challenging. The opportunity set may be a little bit more stressed or deep value, and we really like that. So I would say all of those things, but when you step back and you look at the aggregate population, and then, like I said, the lack of institutional rental housing product, and just in the short amount of time where we've had this business up and operating, the results we've seen give me a lot of confidence that, to your point, the tailwind of growth around housing will be really strong. And so from my perspective, I think it'll be a huge and quickly growing part of our business, and that gets us really excited.
Let's move to the office market. We have been seeing different kind of news after COVID.
Sure.
Is there a new normal for the office market?
Yeah.
And what's the strategy for Brookfield in this asset class?
I don't like to call it a new normal because I think really what it is, like any asset class, it's just a constant evolution. Like the way that people utilized offices 10 years ago is different than it is today and will be different than it is 10 years from now. So I think maybe what's changed is the dialogue around what's an office mean to office users, how do they utilize the office, and what's the importance of the office. And I think that's different from past cycles, where past cycles have really been stress around supply and demand, too much oversupply, or a shock to the demand system, i.e. during the global financial crisis, when overnight you have financial institutions go out of business and all of a sudden you have a lot of big vacant office buildings. This was different. This is changing in behaviors due to something that was unforeseen, like a pandemic, and an evolution really now almost over the past 4 years of what does the office mean culturally, to organizations, to people, to productivity, et cetera. And I think we've seen a constant evolution over the past couple of years. I think we will see over the next couple of years. The things that I think we have conviction on, having 130 million square feet of office globally, is that we've seen in every market the really, really high quality assets outperform. And I think we see that in every economic cycle. So I don't think that's new. We talk about flight to quality. We've seen flight to quality in past cycles. I think the difference now is what we've seen is, given the challenge of the question of what does an office mean, we've seen organizations shift their focus to the highest quality assets because they're thinking about what does that represent for us corporately, what does that represent for our employees? And what we've seen is a lot of demand captured in a relatively small amount of assets, and rents grow, vacancies come down in a relatively small set of the market. The balance of the market, we've seen softness. And I think that evolution, as opposed to a new normal, will be defined by how does the balance of the office market globally react over the next couple of years. And it's different. It's different in different places. Brazil feels very different than North America. North America feels different than Europe, and Europe feels very different than Asia. Our office business in places like India is unbelievable right now. We're seeing multinationals. We see continued growth. We see really strong fundamentals. And Brazil, on balance, actually feels pretty positive, in the sense where I think when you look forward, you could see some optimism around the supply and demand fundamentals improving, and potential outperformance in many high quality assets like the campus we're sitting in today, in markets like Sao Paulo and Rio, where you have a pretty good demand catchment and cohort. So I would say it's an evolution, and the story is not totally written yet, but we'll see over the next couple of years how that plays out. And I think there'll be winners and losers, and we hope to be obviously on the side of the winners.
Absolutely. Yeah. You spoke briefly about logistics. Do you see room for a further growth in this asset class globally, not just in Brazil, but how do you analyze the opportunities for this asset class?
Yeah, so there's no doubt that there's secular tailwinds for logistics globally. When you just think about, again, building out more of an infrastructure for the supply chain of how goods and services need to be delivered now. I think behavioral changes across a consumer base has really changed the required infrastructure for logistics. Yesterday, we were at one of our properties, over 1 million square foot distribution facility, a last mile facility where you can order something this morning and get it to your house in the afternoon. Even a couple of years ago, that was a foreign concept. But once that becomes the norm, then that becomes what the table stakes are. And I think retailers are starting to react to what consumer preferences are and how they continue to build wallet share and, further penetration on e-commerce and digital sales. And I think that will just continue to grow the need for good, high quality logistics. I think globally, if you said generally, there will continue to need more space, but it will be what kind of space? And it'll be location driven and then quality driven. And when you think about a lot of the logistics that exist today, very, very similar to places like in Brazil and in the main markets, it's old and it's getting physically obsolete. And so what it will need to be replaced by is new best in class, and that will require capital investment, expertise around development, and relationships with local and multinational corporations that need a solution for that. And I think that's where we have a competitive advantage. So I think logistics globally over the next cycle, however long that looks, will be a place where we are heavily focused on new investments, deploying new capital, and continuing to build out that business.
Now, I'm trying to figure out how it works in terms of the decision-making process for you, sitting there in New York and looking at the world, opportunities to invest in real estate. Of course, you have a committee and you guys discuss. But under the current scenario with interest rate and inflation, I wouldn't say under control, but, much better than it was 12 months ago.
Yeah.
But with so much tension, geopolitical tension in the world, and you can name China and Taiwan, Russia and Ukraine, the Middle East, and there are a lot of things going on at the moment. How do you decide where to deploy capital? Because, for example, let's talk about Brazil and India, for example. Do they compete for the same money, emerging market money? Is it a different pockets, or you have a fund that you put on whatever is the best opportunity?
Yeah.
Are you more focused on maybe growing your investments in the US and Europe because of distress opportunities maybe? How does it work?
It's a good question. All of the above. No, so look, the great part of having a global business is that you have a huge, broad opportunity set. The challenge of investing on a global basis is, to your point, keeping that relativity front of mind, and where the opportunity set is and where you deploy the capital relative to the inherent risks. Like I said earlier, when I said we like to invest in places where we're local and we have a deep operating expertise, that gives us a lot of comfort. I think we look at every opportunity and it's got to stand on its own merits, and we look at it on a relative risk and return basis. So again, using the example of Brazil and India, we have a global flagship opportunity fund where we invest in real estate around the world. That fund will invest in places like India, it will invest in places like Brazil, North America, et cetera. And so the deals have to be the best opportunities we're seeing. And I think we have, a couple decade track record where we have lessons learned, and where we've been able to refine our investment process, where we understand the differences in investing in certain regions, because we really are there. We're not just allocating capital globally on a thematic basis. We can tie thematic investing with very localized operating businesses, and that just gives us a lot of information that informs that decision-making process. So it's not as simple as, hey, we've got an investment committee and one guy says, well, we have a pie chart and we need more allocation. It really has all of the ingredients, and we think about this on an ongoing basis.